Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I will be speaking about GBPUSD because at the moment we do have quite interesting price action and structure on it. So let's get straight into it. Now, starting here from the monthly time frame, what we can clearly notice is that at the moment we are testing very strong monthly historical support and demand. In fact, from here, the market started all this move to the upside, again here. The market tested and rejected its zone to the upside, again here. And at the moment, we are once again testing this very strong demand and support. We expected a rejection to the upside, and we can see that this rejection has in fact just started. So from a monthly perspective, we could expect more potential bullish continuation. Dropping down on the weekly, what do we see? Now, here on the weekly time frame, we consider the correction actually started in a quite aggressive way, with the first candle covering not only the last candle of the impulse, but also a big part of the previous one. So the correction started very strong. Now, if we want to measure this correction, what we have to do as usual is take our Fibonacci on the impulse leg. Now, in this case, the impulse leg is from this high to this low. And if we do that, what we can see is that we haven't achieved a 50% correction, at the moment we still haven't achieved a 50% correction, and we have not even obviously achieved the 0.618. Now the 0.618 is the golden ratio. It is a reason for which there is a reason for which I have it red, and most of the times the market likes to correct to the 0.618 golden ratio before then starting the continuation to the downside. And that is also why you probably already heard about the golden ratio, Fibonacci retracement, because that is where most of the times the market will stop during a correction before then creating the continuation to the downside. But the bottom line here is that from a weekly perspective, we can expect more a correction, meaning more bullish continuation as well. So both the monthly and weekly are indicating that we could expect more potential bullish continuation. Now, if we drop down the daily time frame, what do we see? Now, first of all, I spoke about GBPUSD a few days ago when the market had created this M pattern. I explained all the reasons for which we expected the market to create the rejection to the upside to go and complete the pattern at the previous support turned resistance. That is now exactly what the market did. Then after that, I made another breakdown explaining why from here what we could expect is first a rejection lower, rejecting this previous support and resistance, and then a break above this resistance. And once again, that is exactly what the market has given us. By the way, I will link in description both these previous analysis so you can go and check them out for more free education. Now, as the market has now broken above all structure, we have to notice how this previous daily resistance, now that the market has broken above it, is turned support here. Now, it's pretty clear that at the time that I'm recording this video, we still have 7 hours to go before this daily candle will actually close. But if it will successfully manage to close above this previous resistance, at that point, it will be turned support. So we could expect the market to react to this level as support, rejecting it to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the pound, we can see how on the pound, we went from having 79.5k to having 79.2k net positions, slight increase, but nothing really strong yet. We had shorts closed 3.2k, less longs closed than shorts, but definitely no longs getting added, meaning that we could still definitely expect a rejection to retest this previous resistance turn support, because this is a level inside of which we could see an accumulation of longs from an institutional perspective on the cable here. Now, if the market will actually correct to this area, and inside of here we will see longs added from an institutional perspective, how we could be approaching this potential move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential move to the upside for the completion of this impulse correction and impulse pattern to the upside. Now, if you do know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description, and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.